All right, ladies and gentlemen, I hope you had a wonderful day. We got to talk about Microsoft beating, Google missing, Snapchat warning about the war in the Middle East, China issuing stimulus, and Xi Jinping visiting his central bank for the first time since he's been president. And then, of course, why the stock market is still terrified of the bonds. So we had another active day. A lot happened. I got a nice breakdown. We're going to talk about what we have to deal with this week. We avoided a couple of bullets. I'm telling you, the whole market today was very green. At some point, we did kind of test that, and you got really close to the lows of yesterday, but for the most part, we ended up good. A lot better earnings to open up in the morning than what we've seen so far, and it got us off to a nice start. And even after hours, I mean, one of the names up, one of the names down. As far as the big dogs, it's going to leave us with a nice digestion, and we still have more on the way. So, Chad, I got the plays, I got the keys, all the good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but still get a spread. Started with a live, but still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, let's start with what happened after hours. Microsoft, this was the best earnings after the bell. It was their strongest sales in 6 quarters. Everything rose. I think it was year over year, 13% growth on revenue, and then intelligent cloud. That is how they define the AI segment, and even Azure, the cloud in general, that grew by 29%. So this was all a blowout, but I don't know if you're asking the question, why did it only go up 4%? The option chain, it was pricing in 5%. We were talking about 2 standard deviations. That would be like 8 to 10% in this case, and that didn't happen, and the stock didn't move crazy. Maybe it'll move tomorrow with all of the analysts, but why didn't it move that crazy today? It is because this is what they forecasted coming in from last quarter. So it was still a good beat. They came in a little bit higher. It was a blowout beat across the board. They're probably going to get treated like Netflix now, where they are able to hold up. None of their guidance, any of the conference call, it did not scare like some of the other times we've seen at the beginning of the year. But that was a good one. And now getting into Google, this is where the story gets interesting because, believe it or not, Google didn't have a bad earnings. It's not like they missed and did bad in revenue. Even like YouTube, which has been a drag for the last couple of quarters, it actually did pretty well considering, and even their growth rate, things are looking decent. But the problem that analysts didn't like, it has to do with Google's cloud. We talked about this yesterday, and I was saying some of those numbers were a little bit weird. Well, here's the story. They made $8.5 billion or so, but as far as like the operating income from that segment, it only came in at $266 million. Analysts were expecting a number of $434 million, all the way as high as to $1 billion. And now why they were freaking out, and is this a bad response? Not really. Don't forget, Google is still up 57% on the year. I mean, they're looking great considering, even if go look at the market, go look at any daily chart. You see this? You know what I'm saying? So they're looking good, but the reason is people are thinking that Google is falling behind with the cloud, even the AI stuff. If you really look at it, Microsoft and Bing, Microsoft fell behind in terms of the search and all of that. The way people and analysts are looking at it now, they're thinking that Google is going to be the one who falls behind on the AI trend, whereas Microsoft takes a leap, as well as even like Amazon and some of these other companies that have way more mature and developed cloud businesses than Google. So that was a big one. There was then even Snapchat. This one just gets stupid, man. Snapchat did very good. If you look at some of the year-over-year numbers, like their EBITDA and cash cash from operations compared to last year was even lower, so that's where you could kind of find some of the negativity, but for the most part, people thought they were going to have sales of a loss of 2.5%, and they ended up doing a gain of 5%, but this is where it gets weird. They're the only company thus far to do it. We'll see what Meta does tomorrow, but they said the war in the Middle East, they noticed big advertising campaigns that slowed down advertising. Pretty much a warning. I know it sounds very, very weird, but they gave internal numbers and everything else looked good. They had a 19% pop and then they came right back down, but we'll see if there's any developments. Maybe we got to wait till Meta, but these were all the big earnings. Texas Instruments, they even got clapped after hours, and why this is all important. Even this morning, you woke up, Coca-Cola, good, RTX, 3M, there was a lot of good news in the morning. So far, though, the amount of earnings season beats, it is lower than average. Now, with some of this changing the next couple of days, we're going to see if we do get some good responses. You might have days where today you woke up 90% of the market was up, but now there could be some other factors. So before I get to that, I'll tell you the one last thing, the only other big driver of the day, and maybe we could talk about what happened here because we did have a nice little gap up. It was a mix of earnings. It was a mix of the bonds not necessarily dying after that rally. And then there was data in the morning, the European PMIs, that ended up coming in weaker. That affected the euro, making the dollar stronger. The yen held up for a little bit, then that weakened. And essentially, even though we weren't really freaking out about what's going on here, our rate situation, all of that, and that's why I think the market moved a little bit but still had weird pressure, the dollar was up from everything overseas. And then even after our data, we did have that PMI data in the morning, 15 minutes after the bell. If you go and see the bonds, I mean, this was the moment to change everything. Like we were talking about with the Bill Ackman stuff yesterday, we really need to see several days of holding up before you could wave the all clear on bonds. And this was a good test right away. Strong PMI data, the strongest in 6 months on manufacturing, strongest in 3 months on services. That shot the yields up right away because that was strong data, but the bonds were able to manage it and ended up going up. So if anything, the only pressure on the day was the dollar. You had war headlines. You were really focusing on earnings. And then the only other final part was China. A lot of the China names did very good. If you go look around, I think even K-Web in general, 4%. That's pretty good for the whole entire ETF. And it was on news of another injection, like direct market injection stimulus from China going into their markets. It's about like $136 billion that they are designating to pretty much buy ETFs. And then this is the crazy news. I don't know how to take this yet, but it means either something really bad is going to happen in China or you're going to watch the mother lode, the kitchen sink you didn't know existed if stimulus thrown at their problem, because Xi Jinping, the president of China, visited the People's Bank of China, their central bank, for the first time. He's been in power for over a decade, and he is not visited at all. Even the history behind like any Chinese leader going and visiting the PBOC, it is like you can't even pull it up. I mean, it's not really something you're going to get access to, but it was unprecedented. It was unscheduled at that too, and that was a big deal. But there was a lot of China stimulus stuff floating in the background, but we've been dealing with so many other stuff. We don't even care about China stimulus news anymore as of late. But so hopefully nothing bad goes on there, because then we'll miss it all. But that was a big deal. And now let's talk about the bonds and why the market is still terrified, because there was a couple of things today, one of them being the 2-year auction. After last week or 2 weeks ago, there's a lot of trauma. The last 20-year auction, you saw carnage. Some of you did not even know that you were supposed to watch bond auctions. So now all of these bond auctions coming up, they are getting a lot of attention. The 2-year today, it actually came in perfect. The amount, the when issued versus what the demand was, it was right on the screws. It came in exactly in line. Now, here is the deal. This is for the rest of the week because we have to deal with earnings. You see the schedule. There's going to be a little bit of data here. We do have Powell tomorrow after the market, but now this week, some people are worried about it because there is $141 billion of short-term duration issuances from the Treasury this week, meaning the Treasury is adding $141 billion of supply on every bond that's lower than 10 years. I said short term, but it's shorter term to be specific. So you have a 2-year bond auction, which we just have. Then tomorrow you're going to get a 5-year bond auction. And then on Thursday, you're going to get the 7-year bond auction. So tomorrow it's $52 billion, and we'll see the reaction. And this is what I said earlier today. Is it going to be a big deal? Maybe it will be. But the scenario that led up to the other bond auctions and where we had a big reaction, it was when all of the bond auctions came in poor from the beginning of the week towards the final one on the 20-year. All of them were very bad, and it kind of just compounded into a very bad series of a lot of supply and not that many buyers showing up. But if you've been paying attention here, and with everything we've talked about bonds, bond supply is a really big deal. So this is one of the underlying issues in the market this week. You got a little monster underneath the surface ready to emerge, especially if there's going to be more problems with the bonds. So that's the first thing about it. And if you saw what happened today, we got to hold up the rally, and I can't stress this enough. I've been saying it. Is that good? Yes. Are we going to know it's all clear? We don't until we get into next week, because last thing we want to deal with is what happened 2 weeks ago. That is what has everybody traumatized. Believe me. Big money, small money, it don't matter. A lot of people are aware. Just when the bonds keep flailing like this, just the problem is not done. We need way more better signs, better data for things to really calm down. But the market is going to do its thing, and it's going to take its pressure cues from bonds and the dollar here and there. But now, this is what I want to show you. The main thing is the 10-year today. And there's just one thing simple you could see. There's 2 points that we're going after, and you've already watched this. I mean, this is what played out not too long ago, thankfully, but you remember the beginning of the month. We were selling off. September was awful. There was a little bit more pressure into October, and because October, the bonds started rocketing. Literally from the end of the month to the first couple of days of October, bonds went up, 0.3? That's a lot. To give you an idea, people felt good the last 2 days. Even then, this was like 0.20. So imagine that on the way up after we haven't even seen that for the first time. But then you came down, then it reemerged, and then they chilled out, and then markets came back down once we started going crazy again. But what you have to see is these 2 points. These were the first cycle highs, I guess, of what we've been through recently. You hit 487, and then you went to like 484. Then you got a little spike here before it dropped at 48. I'd keep this in mind, but generally speaking, below these little peaks is better than above them. That's all you have to look at it for, and that's why I'm saying before we could really calm down, let's get below these peaks, see if things can settle. But if we end up finding a home higher than here, markets are going to have to get comfortable with the new situation. So this is why everybody is still worried, because fact of the matter, you're still sitting at one of the high peaks. 10-year at 5. It keeps touching it. When things get there, we still need to work into that, and we don't know if it's going to be permanent, if we're going to go higher, or if that'll be short-lived, and then we got to deal with something in the economy like what Mr. Ackman has been saying. So, Chad, it's going to be exciting. Either way, we still got earnings. So now, let us get into the plays. So, right off the bat, I got a couple of plays for you. We made a couple of plays here today, but I do want to talk about earnings. So I have an earnings preview just like yesterday for Meta. That's the only one that I'm going to cover here, but then I have 2 other names that report tomorrow. I don't have plays on them, but they move a lot. I want to draw your attention to them. And then finally, I got one play that I made today on a biotech. Got kind of clapped, but then they report tomorrow after hours as well. So getting into Meta, please hold. I had to get this one up. I don't know why it looked like a scroll. This was like really, it looked like a scroll, but either way, here are the numbers. You got a couple of analyst numbers versus what the company has given. However, there has been a couple of changes. So just like Microsoft yesterday, most of the analysts are in line, but there was a couple of recent changes that I noticed for Meta. So I want you to be able to take this in. They're expected tomorrow to bring in $33.59 billion. The company's guidance was 32 to 34.5. The family of apps, they're expected to bring in $33.29 billion. And this was the first change that I saw, because pretty much analysts are about $300 million lower as of right now. They think that's going to come in at $33 billion. Now, that's not the whole story, because you come down to cash from operations, you see that number says 14.74. Well, analysts are expecting that number to be 15.6, and then even the capex, it says 7.2. They think it's going to be 7.1. Both of these things are really good for Facebook, because analysts are saying, okay, maybe the family of apps brings in less, aka they lose more money on Reality Labs, but they're hoping that, or they're expecting that Meta is going to save at least $100 million on expenses and then break in almost $1 billion more in free cash flow, or cash from operations, excuse me, but that's the last one. 7.56 free cash flow is at 8.2. So all around, those were the big changes. Everything else, the users, the growth, and all of that, it shouldn't be too much, but I really think, how much do they spend? How much do they walk away with? Are they not losing as much? I do think that would be enough to keep them doing good, because, again, they're still bringing in a lot of cash, believe it or not. Even if only your grandma uses Facebook, you still use Instagram. But as far as Meta from last close, they're still up 6%. S&P down 7.5%. XLK down 6.1%. Near-term options imply a 8.4% move. Last 4 quarters has been a gain of 4, gain of 14, gain of 23, and then a loss of 25. And revenue has beaten 16 of the last 20 quarters, with EPS beating 13 of the last 20 quarters. So this is for Meta. I showed you guys my play for this one yesterday, and unfortunately I was a victim of volatility. Even though I got it when the stock hit the new low yesterday on the week or so, this all came down. So even if you take a look at Meta, it's higher than where we bought it, but unfortunately, those options were not down to go up. So I only went with the call side. I do think Meta would be good for the downside as well, just because Meta is literally NVIDIA. I think it's almost better at this point, but this thing is like absolutely nuts from the beginning of the year. I mean, $100 we bought in for the long term, 92. It's chilling at $300, and I feel like it doesn't get the same type of hype. So there's a lot of downside there, but it's not as expected that they're going to do bad. Maybe unless Snapchat was right and there was a big deal with the war, but we'll see. Only calls for now. I don't think I'm going to grab those puts, though. I spent like $200 for those puts. If I'm wrong, or the calls, excuse me, then it'll be good. But if it does have a nice beat there, or if they could surprise on CapEx or anything else, maybe it starts rally number 2. But playing the criteria, as you see, Microsoft in line, even Google to the downside in line. So if things aren't surprising, you're not going to get too crazy of moves, but that is play number 1. Then now play number 2 and 3. These are the earnings for tomorrow. I always look at these, Align and ServiceNow. So IBM is going to be a big one for industrials, and there's a couple of other ones. Even O'Reilly, they can move. QuantumScape has the ability to move, but Align and ServiceNow, just over the years, these are 2 big. Was that my DraftKings lineup? These are 2 big movers there. That's not a DraftKings promotion either. Where is it? Here's Align Technology. Again, if you just pull out some of these charts, you'll see some of them, you could just see the movements in their earnings, and then you could see where they've been at. ServiceNow a little bit less, or I think it's a little bit more concealed, but these are 2 big movers usually. I will be keeping a watch on those. I don't have any plays for now, but we will see what happens. But that is play number 2 and 3, and now finally the last play, EWL. Edwards Life Sciences. They came out with phase 3 study from a 5-year trial today regarding one of their heart valve pumps, and they rocketed up. I top-ticked it. I averaged down. Then it got flushed. Ended up coming back up, but the thing about this one, they have earnings tomorrow. So I like the data. I think the earnings is kind of keeping it down there, but why I decided to go for this, I haven't been jumping on too many plays. It was because MDT and Abbott, they're both competitors. Right when that news came out, they started dropping as this started rocketing. I was using that algo response when I'm seeing the competitors drop. I thought that was going to have a little bit more juice, but then it kind of just got halted with everything else in the weird stay pinned in terms of earnings and everything else. But those were the only plays. Going to be writing that one out. I think I'm going to be playing that with earnings. I held out the RTX. That one did good on earnings. Still in those shares, did not sell out. And that's pretty much it. We're going to be writing out this week. I have been playing earnings. I lost on the UAL. The ones I've held through that I already owned have done good. The ones that I've added to make plays, like even the Microsoft Now UAL, those have not done good. So take notes, take hints from this earnings. Let's see what we learn. But Chad, there is still a lot more ready to go. I hope you're locked in. And that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember everything is a cycle, baby. There is a time to cry, a time to celebrate, a time to buy, a time to sell. But everything moves in cycles. You're good, bad, better, worse, good, bad, better, worse. All I'm telling you, then you go around. Life is a cycle. The clock is a circle for a reason. The world is it's all a cycle. It's a circle. Life is just, oh my. So, Chad, stay locked in. Get in the game. I will see you at the end of the year, and let's get through more earnings. I love you. God bless you. That's it, man. That's it. Okay, Horn. I'm not getting awkward. I'm not. You can't see me. It's not awkward if you can't see me, huh? Yeah, what? No, you awkward right now. No, you being a Horn.